Good afternoon, everybody. We are about 2 minutes before the hour by my clock, so we're going to get started here in just a little bit. We're going to give people a chance to filter in, get settled, and then we will start our presentation. Thank you so much for being here for Tax Awareness for Farmers. We're going to have a great time, a great presentation, and we'll get started shortly. Those of you who have just joined us, we're going to get started in about a minute or so. We're going to give people a little bit of time to filter in and get settled in. So thank you for being here, and we will start Tax Awareness for Farmers shortly. All right. Well, we're going to go ahead and get started. I am sure that more people are going to be joining us as we roll along here, but we want to be sure to be respectful of everybody's time and start on time. So we're going to start the show, so to speak. My name is Adam Howell. I'm the Outreach Director with New York FarmNet. Thank you all so much for being here today at Tax Awareness for Farmers. We really hope that you get a lot out of this, that you enjoy the presentation, and that it's very helpful for you as you go about your operations. Just a few housekeeping items before we start. This is a presentation, an educational presentation, so we will have the settings set so that attendees will not be able to use their microphone, should not be able to use their video, and should not be able to use the chat. However, if you have any issues or any problems, you can use the Q&A box at the bottom. We have people on our staff monitoring the presentation and the Q&A, so we can respond as best we can to any questions or concerns that come up there. The other thing I want to mention is that this webinar will be recorded, so you can reference back to it later if you're having any problems, if you have to leave early, or if you know of somebody who this could be beneficial for, please feel free to share it around. We'll be posting it on our website channel at the conclusion of the webinar, probably within about a week or so. So it is going to be available. One thing really quick, our presenter today is New York FarmNet. So for those of you who aren't aware or who do not know about New York FarmNet, we serve any farmer or agribusiness professional throughout New York State. Like I said, we're totally free, totally confidential, and people can contact us 24 hours a day, 7 days a week. So the great thing about it is that whether you're having any problem, whether you're having any issue, concern, question, even opportunity, you can contact us 24 hours a day, 7 days a week. We also have a website, nyfarmnet.org, where you can get a hold of us and request services right there. We will be doing more educational presentations as we go forward in the future. So we really hope that you'll join us for many more. We have another one coming up on October 9th with the documentary Greener Pastures. So we're looking forward to being able to discuss that great documentary about farm stress and mental health with the creators of it. So it's a roundtable discussion, and we're really looking forward to it. New York FarmNet does provide services in the form of personal consultation for both mental health and family and personal issues, combined with also anything to do with the business, finance, management of the farm. So we really are a holistic, full service program, and we're free for anybody else. I just want to bring that up one more time. So as we get started, I want to introduce Andy Gilbert. He is one of our consultants with New York FarmNet. He is one of our financial consultants, and he is an expert in tax preparation, business management, and farm finance. He has a very long and very successful history and a lot of expertise in this realm, having worked and owned and operated a large dairy farm for over 40 years. He has banking experience, and he's a Cornell graduate. So we're looking forward to seeing everything you're going to be talking about today, Andy. I am going to turn it over to you.
Well, thank you, Adam, for that kind introduction. I want to start out with a disclaimer, and I want to welcome everyone to this webinar and hope that it's helps you as you navigate your way through running your own business. This material has been prepared for informational purposes only and is not intended to provide or should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Today, we're going to touch on a number of topics in this Tax Awareness for Farmers webinar: record keeping, documents and tax forms, common terms and definitions, being prepared, tax planning, and tax payment options. We're going to start with we're going to have 3 poll questions. We're going to start now with our first poll question. As you think about and answer the questions, we will share the responses of the audience at the end of a short period of time.
So for those of you, the first question is, the goal of tax planning is to pay the least amount of taxes. There's no right or wrong answer. Just please answer and then send.
Okay, if we want to close that poll question, we can move on. For those of you that answered true to that question, I'm going to challenge you a little bit later on and why that might not be the best idea in the long term for you. The big picture: why is tax awareness important? Small business owners have more control over your income and expenses. Small business owners control when they pay their expenses, and they can many times defer income. So you want to take control of your business life, and there's a number of unrealized benefits that are within your reach with a little knowledge, self-education, and planning. What are the benefits? If you lower your taxes, you can have more money in your pocket. As I mentioned, there are a number of credits and deductions that you may not be aware of that may help you in a number of ways. If you can lower the cost of having your taxes by being better prepared. One of the things we're running into across the country even, and it's not just in agriculture, it's in all industries, are the shortage of accounting professionals. So if you work with someone that's good at helping you with your taxes, you work with a tax professional, you find somebody that's good, you may ought to consider staying with them because it's just very hard at this point in time. And you also, as running a small business, you don't have a 401k that your company has. If you work for someone, you need to think about how you're going to fund your retirement. We've got our second poll question.
Okay, everyone, our second poll question asks, who does your taxes? Do you do your own, or do you use a tax professional? We'll give you about 1 minute and then we'll share the results.
I want to thank everyone for answering that question, and that's something we're going to talk about as we get a little further into our presentation today. Record keeping best practices. Any system that you have is better than a shoebox. Many of you may not be aware, but we still get clients that come into us with a shoebox full of receipts and expenses, and they try to get their tax prepared to take care of that for them. You need to have complete records for accurate returns. And we recommend that you use accounting software that categorizes your expenses and just makes it much easier for you. A lot of the accounting software programs that are out there are very well developed, and they can really help, and they do updates with the software programmers that make it fit your business. Many of them even will transfer a lot of your income and expenses directly to a Schedule F. Spreadsheets are great, but they can't run reports. And if you use sales reports, things like Square, they don't include expenses. So that misses out on part of what you're trying to do. And you can use manual account books. If many of you may remember the old Cornell account books, but they require time to do all the addition work that you have to do. They don't categorize expenses for you. And they certainly won't do things like help you run payroll, because I forgot to mention a lot of the accounting software programs that are out there as your business grows also have payroll programs that can help you do payroll. When you're doing accounts and expensing, you want to keep your business and personal accounts separate. There's several good reasons for this. One of them comes to mind that a lot of times we see the individuals and businesses have quite a high personal expenses, family living expenses can get out of control. It just is a good idea to keep these separate. You want to have a single business checking and a single business credit card. And when you're taking expenses in your business, you want to be realistic. In the chance that you may get audited, auditors are really good at identifying red flags. If you try to expense items that are out of line or look funny, it may trigger an audit. Okay, did I miss one? Okay, the typical tax forms that you're going to see. The Form 1040. This form is filed by everyone who owes taxes. Any information you have from all other schedules and forms ends up on your 1040. The Schedule F is what you file if you're reporting profit and loss from farming. Now, the Schedule F for married couples can file a Schedule F with their joint 1040 without filing a partnership return. All others that work in a partnership need to file what's called a Form 1065 or a partnership return. This is filed by anyone in a partnership to file partnership income. This includes LLCs, but not single owner LLCs. The Form K1, if you're filing a partnership return, all the partners receive a K1 to report their share of partnership income. On the partnership Form 1065 that you file the Schedule F with the 1065. When you have the Form K1 as a partner, that's all you get. You don't file a Schedule F with your individual return. Form 1099. This form shows non-employment income and has a letter following it. For example, the 1099-K is used to report Venmo payments. If you get Venmo payments of $5,000 or more in 2024, you're going to get a 1099-K. And they're moving this threshold down to $600 in 2025 because the IRS has figured out there's a lot of payments that are being made through Venmo and PayPal that people just aren't claiming on their taxes. In addition, Form 1099 has a number of other numbers and letters that go with it. For example, the 1099-K I just mentioned. There's also a 1099 INT for any interest income. And the interesting thing with this form is if you run a business and you have pay a veterinarian, you may have to, in addition to receiving 1099 forms, you may have to provide those forms for your vet if he works for you more than $600 a year. This is what your Schedule F looks like. As I mentioned earlier, it's for reporting farm income. Married couples can file a Schedule F with their joint 1040 without filing a partnership return. But anybody that has profit or loss from farming, whether you're a partnership or an individual, you'll end up filing a Schedule F. If you look on the Schedule F form, you'll notice line 32, there's other expenses. A lot of times when people do their own taxes, they have a huge category that's other. This is a potential red flag for an audit. And here's Form 1040. Most of you have seen this. As I mentioned before, it's filed by everyone who owes taxes. The information from all your other schedules and forms ends up on Form 1040. Okay, I want to cover some common tax terms and definitions. Self-employment taxes. If you work and you're a W-2 employee, on your W-2, you'll see listed for Social Security and Medicare. This is only the employee part of the Social Security and Medicare taxes. If you run a small business, you have to pay both the employee and the employer share. This is something that typically trips up a lot of people when they just start a small business. They don't realize how much money this is. It's also the taxes that you're likely to pay the most taxes are self-employment taxes to fund Social Security and Medicare. I want to talk about depreciation, what Section 179 is, refundable and non-refundable credits. And then we'll touch on a couple of credits and the put in service rule. Depreciation. Okay, want to go next to common tax terms and definitions. Cash and accrual accounting. Cash basis accounting records revenue and expenses when actual payments are received. For example, if I sell someone hay and they pay me $100 for that hay, I record that as income as soon as I receive the money, and I record expenses as soon as I pay for them. Accrual-based accounting is quite different. It records the revenue and expenses when those transactions occur, but before any money is received or paid out. Most farmers use cash basis accounting. The other thing is cash basis accounting is quite an advantage when it comes to opening up tax planning opportunities for you. And I talked a little bit about self-employment taxes. The other thing with self-employment taxes, if you're working as a business owner, you have to make quarterly estimated payments, which are based on the amount of money that you think you're going to make and you're going to owe. You just can't go to the end of the year and not pay any taxes ahead of time. There is an opportunity for you to do that, but it's quite complicated. We'll talk about that in a minute. But generally, self-employment taxes cover your contribution to Social Security and Medicare systems and to pay any income taxes because your taxes are not withheld throughout the year. Again, we're continuing common tax terms and definitions. Salary or wages versus owner's draw. When you are an employee, you get a salary. When you're running your own business, you take a draw. The business owners pay themselves through owner's draw, and they're also called equity draws. And when you cut a check for yourself for personal use, that's what you're doing. You're taking a draw. Your owner's draws really have nothing to do with the profit of the business. The profit of your business is what it shows up on your 1040 and on your Schedule F for the farm. refundable and non-refundable credits. Non-refundable credits can reduce the amount of tax you owe, but they do not increase your tax refund. I want to talk about this a little bit. What happens with a non-refundable credit is you have to owe tax to get the advantage of that credit. The better credit is a refundable tax credit. The refundable tax credits can result in a tax refund even if the total of these credits is greater than the tax that you owe. A good example of a refundable tax credit is the earned income credit. The more money you earn up to a certain point, you can receive earned income credit. You don't have to owe taxes to get it, and it adds to your refund. The child tax credit's another common tax credit. It's available for people with dependent children under the age of 17. The child tax credit's a little bit different because part of it's refundable and part of it's a non-refundable credit, depending upon how much income you earn. Okay, depreciation. When you buy a fixed asset like a building, equipment, or machinery, that asset lasts for a number of years. So depreciation allows you to take a cost for that asset as expense in your business, and it accounts for the loss of the value over time and with use of that equipment. A depreciation schedule allows you to deduct the allowable portion of the total cost over each year of the asset's usable life, rather than taking the full expense in the first year the asset was purchased. Now, after telling everyone that, there is a section of the law called Section 179. This section of the tax code allows a business to deduct the cost of certain property as an expense when the property is first placed in service. Section 179 basically allows you to take the cost of a tractor you might buy for $70,000 and write that total cost off in the year that you purchase it. So it really is an accelerated expense for that item of machinery. Now, what business documents should you be thinking about giving to your tax preparer when you go to meet with them, assuming you use a preparer? The past year's tax return. Of course, if you work with the same person on a yearly basis, the program they use will have all of your records from prior years. You also need to give them estimated tax payment receipts, a year-end balance sheet, a year-end profit and loss, and any payroll-related forms such as your W-2, your W-3s, anything that relates to how you paid your employees and what Medicare and Social Security withholdings you had to pay in on the behalf of your employees, along with any other forms you get like 1099 miscellaneous for other income received in your business. You also have to be careful of providing other documents that may be needed. Tax notices such as a 1095-A, which details your health care coverage. I mentioned earlier 1099 INT for interest income or investment or dividend income you have. You also need to provide your preparer with a depreciation schedule showing any asset's cost basis and prior depreciation that you took. In this case, if you work with someone, they will carry that forward. But if you have a new preparer, you have to provide them with all this. One of the common tax deductions that people don't take advantage of is for their home office. If you use a part of your house that's dedicated solely for your business, you can take a home office deduction. You need to have the square footage of the area you use, along with normal house expenses. And you also need to provide mileage reports or business vehicle expenses for your preparer to take advantage of those deductions. Okay, we have our third and final poll question.
Okay, this is number 3 concerning your record keeping system. So what types of record keeping systems do you use? Do you use pencil and paper, accounting software such as QuickBooks, Centerpoint, or Wise? Do you use an Excel spreadsheet, or do you have other things that you're using? We'll give you about 40 more seconds or so to answer the question, and then we'll share the results. Mike was asking if we could see the results. So we had 22% that said they used pencil and paper. 42% said they use an accounting software. 42% use an Excel spreadsheet, and 25% use other.
Thank you for, oh, there it is. It showed up. So thank you for that. Okay, we came up with a seasonal to-do list. In the spring of the year, you need to touch base with your tax preparer as early as possible to share any tax forms you received, along with your year-end income and expenses. Be ready to sign or e-sign your returns and pay your estimated tax payments for the following year. For January through March, they're due April 15th, the same time that your tax return is due. In the summer, this is your busy season. You want to stay committed to monthly reconciliations and try to keep up in track with your income and expenses, because this is a time of the year when people generally are busy and they get behind. Be sure to track mileage and deductible expenses and keep track of those. And your estimated tax payment is due for April 1st to May 31st is due on June 17th. In the fall, you want to meet with your tax preparer. You have to get a chance to talk to them. They're very busy, but in the fall of the year, they tend to be less busy and have more time to visit with you. If you had a good tax year, you may want to consider making purchases for the next season that can be deducted from this year's tax income. And your estimated tax payment for June to August is due September 16th of 2024. And in the winter, you want to slow down, catch up, and clean up any issues and complete your reconciliation so you can hand those off to the tax preparer. And your estimated tax payment for September 1st to December 31st is due January 15th of 2025. Now, I'm going to show you how this doesn't work like we're supposed to, because I missed a slide that I wanted to talk about. So I'm going to go back and find it. Ah, here it is. I must have clicked through too fast. I'm sorry to do that to all of you. I want to talk a little bit about record keeping best practices, and this slide was important. You want to schedule time to reconcile accounts. This work you're doing is just as important as field work. A lot of times in a business, I know you get busy, you get up in the morning, you want to head out to the barn, go to the field, get things done. My recommendation is that you try to set aside time early in the morning. A couple of things happen if you leave this job till the end of the day. The first one is when you're tired at night, you tend to make more mistakes. And I can tell you this is speaking from experience. The second thing that happens, it's probably worse, is you get to at nighttime and you say, well, I'll do this tomorrow, and tomorrow never comes. I put in here, you want to do it monthly while your memory is fresh. I really would recommend that you try to do some of this kind of work every week. And it's easy to remember, where did I write that check? What was it for? And how can I categorize that expense and put it in the place it needs to be? You want to print off bank statements for manual reconciliation. If your bank is connected, you want to review categorizations, I guess I've got that wrong, of expenses. And also, when you're looking at it on a regular basis, you'll have a better chance to see areas where you're overspending. Try to take advantage of technology. I mentioned mileage. There's a mileage app that you can get for your phone. Most everyone has a phone now that'll take these apps. The current reimbursement for mileage is 67 cents a mile. I commonly see that people forget trips. You're busy, you're going to head to the hardware store, you're going to head to the John Deere dealership, whatever, and you just forget to put that trip down, and you just lose the advantage of this deduction. There are a number of apps that store receipts, and they categorize expenses on the fly. And as Lori mentioned in the last poll question, QuickBooks, Expensify, Wave are available. They're good programs We aren't touting any of them, but they're all pretty good. And the other thing you want to think about is regular suppliers will print out a yearly report for you that shows all the money that you've spent. One of the things I recommend clients do, if you have repair in your list of accounts, that's under that repair account, you put a sub account for whether it's Lowe's or whether it's your John Deere dealer. So when you're looking at the end of the year and you're reconciling, you can get a printout from the dealer, a printout from Lowe's or Home Depot, and it should match up with what you have in that sub account. So I'm going to flop forward. Past. There we go. Okay, now we're going to touch a little bit on tax planning. You need to understand what credits you qualify and try to maximize them. A lot of times when people, their only goal is to pay almost no tax or figure it out so you aren't paying any tax at all, you lose the investment, the earned income credit and the child tax credit, because those are based on your income. The earned income credit particularly is very beneficial. And the more you earn up to a certain point, the more earned income credit you receive. Child tax credit works somewhat the same way. As part of it is a non-refundable credit, so you have to have a certain amount of earned income to qualify for the child tax credit. There are a number of state tax credits as well, and I want to mention one in New York that's particularly valuable. New York State has an investment tax credit that's fully refundable. For example, if you buy a tractor for $100,000 and you qualify as a farm, you get a $20,000 tax credit in New York, and it's a refundable credit, so you get the entire credit. The next topic is Social Security bend points. Social Security is really a good thing particularly for low-income taxpayers. And I want to talk a little bit about Social Security bend points and how Social Security retirement is calculated. Many times people assume that the more you pay into Social Security, the more you get in retirement, and that it's linear, but it isn't. For the first $14,000 of income, the Social Security retirement formula counts 90% of that toward your retirement benefit. But then if you earn more, as you earn more income between $14,000 and $65,000, that income is only counted 35% toward your retirement. And for income between $65,000 or 80 and $160,000, which is a Social Security maximum, that income is only counted 15% toward your retirement benefit. So this is really a good deal for lower income folks in the Social Security retirement system. The second advantage of this is you get disability coverage when you have enough Social Security credits to qualify, and that coverage is beneficial for your family if something were to happen to you. And we all know that farming is a dangerous occupation. The last one I want to mention under this is income averaging for farmers. This is a complicated topic, and it's something you really need to work with your preparer on if you're going to use income averaging. Okay, when you're looking for a tax professional, these are numbers.
Andy,
Yep.
can I interrupt for just a moment? Just
Yep.
so everyone's aware, we will not be answering individual questions during this webinar. Our role is education, and we're just trying to give you some awareness things. So I'll let Andy address that as well. Thank you.
Well, thanks, Lori, for that. I'm assuming you're getting questions in the Q&A part. Tax professional considerations. If you decide to use a tax professional, these are a number of things you want to really think about. The preparer qualifications and experience. If you're a partnership or may form a partnership in the future, can your tax preparer do partnership returns? Or can he or she, do they have experience doing them? One of the lawyers I work with says the partnership tax return is just a minefield for incorrect answers and lawsuits because it's quite complicated. Do you want an independent preparer or someone that works for a firm? Now, there are a lot a very good independent people that work independently by themselves to prepare taxes. The issue with that is it's important to have continuity in tax planning from year to year. And when your preparer retires, if you're working with someone who's doing it by themselves, you're going to have to do that planning and that continuity yourself. A lot of times, people that work for firms have training and support the firm provides. It may be more available for a preparer working for a tax firm. The third thing you want to consider is the personal relationship. Are you able to work closely with the person you select, and do you have faith in their abilities? And speaking from experience, I was very fortunate. The tax preparer I had for the entire time I was farming graduated from Cornell a year ahead of me, and he continued to do my taxes for the entire time I ran the farm. So it worked out very well for me. I put costs down here at the bottom with a question mark. I mentioned earlier that good accounting professionals are in short supply. I know you're all trying to save money and save costs, but a lot of times a good preparer will save you money and set your business up for success. Tax payment options. If you owe tax, you must make estimated payments based on the prior tax owed. This helps you avoid a giant tax bill at the leanest time of the year. One of the common things I see when I prepare taxes for people that are just starting their own business, they don't even realize that they owe the self-employment taxes I talked about earlier. And they get to the end of the year and they have a huge tax bill. You have to make payments if you owe over $1,000 in taxes. You will be fined. There will be a penalty for that, and you will also be assessed interest. Now, I mentioned earlier that farmers have a choice if you don't want to pay estimated taxes. You can file your return by the 1st of March and pay any tax you owe at that time. Now, you think back to all the things you need to do to file your return, the forms you need to have. This is kind of a hard lift for a lot of people. It also, I've noticed over the years, a lot of places do not get out tax forms, like the 1099 forms you need to file your taxes. They're late. They're supposed to be out by the 31st of January. Many times they drag into March. So this is kind of a hard thing to do. You can file an extension but you still have to pay the taxes that you owe. But if you can't pay the taxes, there are a number of state and federal payment plans. There's short-term plans, there's installment agreements. In all of these cases, interest and fees apply. If you get behind on filing taxes, and notify the IRS or your tax preparer as soon as possible to stop the clock. Like I mentioned, there's a failure to file penalty and interest. There's late payment penalties and interest. You don't want to panic about this. Just set up a payment plan. You don't have to pay everything at once. And if you do set up a payment plan, you stop the penalties. You can also file up to 3 years late and still get a refund if you're owed a refund. So think about that if you're behind on filing. And the earned income tax credit and other tax credits can help you cover the tax liability you may owe for Social Security and Medicare taxes. But you have to file to be able to get the credits. I want to wrap up, and I want to emphasize a couple of things. The first one is record keeping. It's very important to keep good records. Good records will enable you to file a timely and correct tax return, and it will also help you. Good records are also important to help you run your business and make good business decisions. The second thing I would recommend, and I know a number of you said earlier that you do your own taxes, but develop a relationship with a tax professional. Look at tax filing as something that is long-term. A lot of times people just think, I've got to file my taxes this year, I have to get it done. And it really is something that over the long term of running a business, you have to make a number of decisions that impact your business over the long run. And so don't think of it as just 1 year to get it done and then go, what am I going to do next year? And facts and circumstances matter. So the facts and circumstances about your business, about your personal life, how many dependents you have, all of that, all those things are a little bit different for everyone. And working with someone on a year-to-year basis that understands and knows your business can really help you. With a little bit of planning and forward work, April 15th is not such a taxing experience. Sorry to throw that little bit of tax preparer humor in there at the end. These are the FarmNet website, and the newsletter is and my contact information. We've also got the Internal Revenue Service and the Social Security Administration websites up there. There's a lot of good information on those. And I want to thank you for joining us today and hope this has been helpful. I'll turn it back over to Lori.
Hi, thank you everyone for participating today. I know there were a few questions that came up, and like I said, we're unable to answer them because of, as Andy likes to say, facts and circumstances of everybody's situation. I did have someone ask if you can provide sites to help seeking a tax professional. We at FarmNet do try to help you to find tax professionals that we're aware of. Andy, do you have any other suggestions?
It's a difficult, like you said, Lori, we do have a list of people. It's difficult. You can go to, if you're getting, borrowing from a bank, ask the people at your financial institution if they have suggestions for you. And maybe friends and neighbors have people they've worked with. It's just a difficult situation we kind of find ourselves in this regard. And it's even more difficult if you're looking for someone that's really good filing partnership returns. So it just is very, very hard thing right at the moment.
Okay, so again, we'd like everyone to know that this presentation will be made available at our website at newyorkfarmnet.org. And you should be notified as well through the email that you provided us. And it may take up to a week for it to get posted, but just be watching for that. If you have any other questions, we hope to continue to provide educational information about taxes. Again, it's hard to get into specific questions just because most of us are not tax professionals, but Andy's the exception. And we would like to just know what your concerns are, and then we can only address them in generalities. But we thank you for participating, and we hope you have a great day.